In the AFEX commodities market, the number of deals done in the week ended December 20 was down by 30%. However, all the other indices closed in the green. For details of the activities and more, here is Femi Kende, analyst structuring and origination at AFEX. Hi, Femi. Good morning. Thank you for joining us.
Hi, Chimeze. It's an honor to be here.
So bring us up to speed with activities in the week that ended December 20.
So for the reporting week, we actually saw a significant increase in the value traded and the volume of commodities executed for the reporting week. The week ended with a total turnover of 1.3 billion naira, which represented a 119% increase week on week. In terms of the volume traded, we actually saw the execution of 5.8 million contracts for the reporting week, which represented a 158% increase week on week. However, the total number of deals executed this week actually declined by 30% as 190 deals were executed. For the financial benchmarks on the exchange, we actually saw a slight increase in the AFEX export index and a significant increase in the AFEX commodity index, as the AFEX commodity index actually surged by 2.37% week on week to close the week at 449 basis points, and the AFEX export index actually closed the week at 192.84 basis points to increasing by 0.33% week on week. For the volume traded across all commodities for the reporting week, maize continued to account for a significant proportion of the volume executed, as 4 million maize contracts were executed this week. However, this was followed by soybean, sorghum, cocoa, and cashew for the reporting week. In terms of prices, we actually saw a significant, a positive performance in the prices of maize, sorghum, cashew, while we saw a negative performance in the price of cocoa. For the week, maize actually closed at 201 naira per contract, increasing by 1.89% week on week. Sorghum actually closed at 227 naira per contract, increasing by 6.51% week on week. Cashew actually increased by 13 naira to close at 480 naira per contract, which represented a 6.66% increase week on week. However, cocoa declined by 10 naira to close the week at 1,210 naira per contract, representing a 0.81% decline week on week. Other prices on the exchange remained the same as the previously reported week. For more information about our report, you could actually check our website, which is www.afexnigeria.com, or you could follow us on our social media at AFEX Nigeria.
Now, how well would you say staple performed since the start of the season?
Right, so staples have actually had a fairly good performance this since the start of the season. When you look at staples like maize, soybean, and sorghum, you would actually see that season to date, these commodities have reported a 5.71% increase, a 2.81% increase, and a 6.87% increase week on week. This is actually in line with our crop production forecast, because we know that a lot of these commodities, a lot of these staples, the production or the supply of these staples actually declined for the 2020 wet season harvest, which is supposed to be used to service the 2021-2022 season consumption. So with this in mind, we know that demand will continue to pressure prices upward as we can currently see.
And compared to the previous year, what are your observations in terms of price fluctuations?
Yes, so comparing the same period for last year as what we currently have right now, the AFEX commodity index as at this time last year increased by 15.50%. Comparing that to what we currently have for the AFEX commodity index, we've seen an increase of 5.71%, and we know that this is going to continue to be the trend. Why is this? The nature of the infrastructural gap in the country is still largely there. We know that storage, the availability of storage is currently lacking in the country, as right now we know that operational storage can only store about 4% of the annual grain harvest. With these, farmers are actually left to actually supply more. But there's a tricky part to it. Demand is actually increasing, or demand has actually increased to compare to what we had in the previous year. And this is as a result of the fact that many people are aware that the current supply for the commodity isn't as much as it was in the previous reported year. So you see a lot of people trying to compete for the commodities that we have in the market, and you see that the commodities will actually go for the highest bidder. So in terms of this, we know that prices will continue to move upward, and this trend will honestly continue into the new year.
All right, Femi, I'm looking forward to seeing you again before the year ends. In the meantime, Have a wonderful Christmas holiday.
Thank you very much, Chimeze. Same to you.
Thank you. Meanwhile, Yusuf Oguntola, head structuring and origination at AFEX, joins us now to review how the commodities market performed in the fourth quarter of the year, including factors that might have affected the market. He will also be discussing the outlook for the next quarter, especially after the festive period. Thank you very much for joining us, Yusuf. Good morning.
Good morning. Nice to be here again.
So what has been the impact of harvest on prices, and how do we expect the festive period to affect prices?
Thank you very much. That's a twin question. And what I'll do is to take it from the first leg. So what has a harvest done? What's the impact we've seen so far? And the simple answer is that harvest has pretty much had a very muted effect on prices of commodities generally in the country. And the reason is simple. Last year, we saw prices rally significantly from harvest, and a number of processors were beaten hard, right? And this year, everybody is coming to the market. Funds flow is stronger this year. A number of these processors are leveraging on a number of opportunities they have in the industry to buy commodities at this time and utilize later in future. So as it stands now, we are in a situation where prices which we expect to decline or moderate have not really declined or moderated rather, but rather we've seen a situation where prices just muted for a while and then they've continued the upward trend, especially for commodities like soybeans. So harvest, yes, we've seen some volumes come to the market, significant as well, but then it hasn't had that very weighty effect we would expect on prices. December is a festive period across the world, and that does not exclude Nigeria. And that means that there is stronger demand, stronger consumption. People go out in December, spend a lot on outdoor activities. People go to restaurants and they eat. So that means that there's a lot of demand for food commodities at this point in time. So the expectation is that we'll see that price rally continue all through December. Probably we'll see some muting in January, February, as we expect that processors will retract from the market and relax on their buying positions. So expectation is that we'll continue to see this price movement until the end of December, most likely into the second week of January, third week of January. Then we begin to see some slow reaction. Then we begin to see processors relax and retract from the market. And as a result, prices will most likely mute or moderate as over that period of time.
Well, over time, we have seen the headline inflation moderating. However, there seems to be some kind of pressure on the food inflation. Now, do you expect further pressure on food prices, particularly this festive season in December? And what is your outlook for food prices?
Yeah, so I think for the last 5 to 6 months, we've continued to see some moderation decline in the CPI, but then the food prices have continued to remain strong, remain heated. And just like I said earlier, December is a very, very significant period for businesses, especially businesses that provide food and leisure services. And this means that there will be demand in these spaces. And you would expect once there's demand, you continue to see that pressure. This pressure we've seen will continue to exist during this period. And then most likely, just like I said earlier, we'll decline or relax a bit in January, February, as we've based on our own expectations. So we'll continue to see that pressure till the end of the year, going into the coming year.
Now,
one thing I would like to mention to add, however, is that if you look at the forces driving this market, you would realize that a number of them that were there last year are still present. So you see that policies that were implemented last year are still ongoing. The posture of the exchange rate is still not favorable to import any commodity into the country. So there's still that backward integration by these processors, which continues to put pressure in the market. So long term, if you are looking for a 6-month to 9 months expectation, the 6 month to 9 month expectation is still a bullish expectation, even though we might see some moderation in between, but the 6 to 9 month outlook is still bullish.
Now, are there factors we should actually watch out for that will likely influence commodity prices in the coming year?
Yeah, absolutely, absolutely. There are a number of them, and rather than looking at it from sectoral expectations, I'd rather look at it from macro expectations. So 2022 is a penultimate election year, so you would expect that a number of, there's likely going to be higher spending in that year. You see a number of you see households and individuals spending more during that particular period of time. So that's expected to push to drive commodity prices. As well, we see, even though inflation has been receding in the past 5 to 6 months, it still remains a concern going into 2022. And anybody looking at this market, watching this market, it would be nice to watch out for what inflation is doing in driving your expectation about the market. Thirdly, you'll be looking at the exchange rate, which seems like still in the condition we are in. We've had some relatively less volatile situation over the last 1 to 2 months, and you would expect that that situation would go into 2022. So these macro conditions continue to remain there. Rather than looking at it from a sectoral perspective, I would rather look at it from a macro perspective. And I think these macro perspectives, macro conditions are still there, and they continue to drive the markets going into 2022.
So how is the exchange getting ready for the new season? And are there insights into how this will help boost the food security of the nation?
Yeah. For us, the food security drive, the food security journey is not limited to just the production season, whether wet season or dry season. It's an all-year challenge that we've committed to solving. And just like we discussed some weeks, about a week or two ago, about the $100 million fund that AFEX is planning to deploy in this market. So that's on the one hand. On the other hand, there's the wheat plan by the federal government that is also ongoing as we speak. There is the dry season farming that is ongoing as we speak. And for us, we think that there are a number of opportunities that are also emerging. Just this past week, in the last 7 days, if I'm not mistaken, the AFDB approved the funding for the SAPZs in Nigeria across a number of states. And we think that this is critical. It will be helpful in solving some of these challenges, and we are locked in on that. We have a very strong commitment in helping the various stakeholders achieve this goal. So for us, it's a journey. It's not just one destination. And for us, we are already kickstarting a number of other activities to help solve some of these food security challenge.
Thank you very much, Yusuf, for your time with us on the program this morning, and have a Merry Christmas.